day traders from across the globe, and welcome to the 922nd edition. I'm talking 922 videos that are geared for technical analysis, that are geared for short-term trading, that we put out for you evening after evening. This is video 922, traders. I am Oscar Carboni. I've come direct off the trading floors where I spent most of my adult life, and I am teaching you the tips, tricks, and techniques that I have learned from the old pros down on the trading floor in these nightly videos. As you know that this is an extremely risky business. Futures trading is extremely risky and can cause substantial financial loss. This game is not suitable for all trading accounts, and certainly if you do not recognize that a stop is your best friend and you should always place your stops first, if you do not recognize both of those things, you certainly should not be trading. For the rest of you traders out there, let's get moving. Traders, video 922. This video is being filmed on Tuesday night for trading, Wednesday, September 26, 2012, and what's on the board? Right off the bat, you may notice a red Omni in the ES, the Dow, the NASDAQ, the US indices. Traders, they look crappy right now, right? Now, understand something, no matter what you are about to see in this video on Tuesday night for trading Wednesday, it is bearish. It is bearish both on the daily and the weekly charts. Well, I don't know so much about the weeklies, but it's certainly bearish on the daily charts, and we will be bearish for trading on Wednesday. However, I do not want to see you fall in love with the downside here, traders. It's going to come off, yes, and it's customary in September to have some kind of a pullback, but do not fall in love with the downside, because what should happen is we back off in the U.S. indices for a little bit of time, and right back up we go for new highs. That's what the charts are telling us, and that's for slightly longer term trading. For short term trading, what are we going to do for September 26th on Wednesday? Red Omni, we're selling the Dow, the NASDAQ, the emini S&P. We'll see which ones set up. Traders, the U.S. indices are due for a pullback again on Wednesday. It is what we expect. A pullback expected on Wednesday. The Dow Jones Transportation Average is leading this parade. The Transportation Average is just yanking the rest of these markets down, and I'll show you some charts on that. The grains are expected to drop again on Wednesday, and the CRB index is confirming that action. Traders, I have a bunch of charts I want to show you. Make sure you pay attention to this video segment that's about to come your way, because it's got a lot of interesting charts that will depict what's going on in the U.S. indices, why the tranny looks so bearish, and that the grains with the tranny look like they want to come down. I'm going to show that to you in a second. Traders, if you like the chart analysis that you are about to see, you can study with me for a 4-day training session live here in Las Vegas. It's called OMNI Camp, and it is October 26th, 27th, 28th, and 29th. It is a 4-day training session held live here at the OMNI compound. It's you and me. 4 days. If you want to train with me, it's scheduled for October 26th through 29th. Come on down to livewithoscar.com. Fill out the OmniCamp applications, and I'll be more than happy to qualify you and see if you can come out to my training session called OmniCamp. Traders, with no further ado, let's go look at some charts.
Traders, Oscar Carboni is holding another OmniCamp live in Las Vegas. OmniCamp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
Okay, traders, the first chart you are looking at this evening is the Dow Jones Transportation Average daily bar chart. It is deemed the leader of U.S. indices, and in the past couple of days, boy, oh boy, has it been leading us to the downside. Traders, you've seen this chart before. Remember we had this apex right here? This dotted blue line used to be red, and this is what we thought was our apex. And we thought, well, a pennant really, we thought that this was a false breakout on the bottom side of the pennant and we'd blast through the top. What happened instead, this turns out to be our false breakout. This line simply gets shifted to here, and here's the real breakout. We are on our way down, traders. Scary as it is, this was the false breakout. That's the real breakout. The tranny, the leader, is dragging the rest of the complex with it. And if the leader goes down, so will your NASDAQ and S&P. Let's continue to look forward. Traders, the Dow Jones Industrial Average daily bar chart. You've all seen this chart many, many times before. Remember, it started out with this head and shoulders back here. We did our projection. The projection told us we'd come all the way down to here. We dropped all the way down to that red line. Then we started building this parallel channel. Once we started in the parallel channel, you can see with the red circles how we went from the top to the bottom, top, bottom, top, bottom, top, bottom, top, and we're backing off now. We were building what looked like a bull flag, but we're lower than the bull flag, and likelihood is we're going to this spot right here, which is customary. Top, bottom, that's what's been going on for quite some time. So down to the bottom is where we likely will go in the Dow Jones Industrial Average. So more proof that we are going to move lower tomorrow on Wednesday. Then you have the NASDAQ daily bar. Traders, look at how it's broken through this major parallel channel it's been in. Nice bullish parallel channel. Well, we've broken through that channel and settled right here. Very bearish for your NASDAQ. I'm going to take another look at this very same chart. Not only did we get below the parallel channel, but we're below the bull flag, or I should say an F flag is what this was. We had an F flag forming. We've dropped below it, below the parallel channel. Both of those took place right here. So here we are, bearish look for trading Wednesday in your NASDAQ. Then if you look at the S&P on a daily bar chart, S&P, it's a do or die trading session because it is hanging right at the bottom of this flag. It's sitting right here, and I do not think it's going to do. I think it's going to die, and this market goes lower, probably down to the blue line of the big blue parallel channel. So there are your daily charts, traders. Now let's step off to a weekly, and let's keep our wits about us. Those daily bar charts were basically very bearish for trading Wednesday, undoubtedly. But here you are looking at weekly charts of the NASDAQ. Right now you're looking at a NASDAQ weekly chart. I have used this many times before, traders. If you recall, this was an epic chart that we looked at over the last few weeks. I recognized this repetitive pattern. Told you we were in it right now. We drew these two red lines and said they would fill in just like these did, and they have filled in. Do you know where we are right now? We've backed off to the bottom of the red line, and see this blue dotted line? This represents what was previous highs before the dip. Well, all we've done so far was come down to test this high, and we're hitting the bottom of the parallel channel. We're right here. That, my friends, is not bearish. That may be bearish for a day. That is not bearish on the weekly chart. We have to take out this whole line right here to become bearish on the weekly chart. Then maybe you can keep your eyes focused on this area. But until then, the weekly gets respected. We will be very nimble in our short sales on Wednesday in the emini and the NASDAQ, expecting that this is going to materialize and hold as support. Will it hold? Well, that's another story, traders. We'll let the market tell us that, but let's know that it's here at least. Then you look at the E-mini weekly. The weekly bar chart, inverted head and shoulders, which is bullish, goes into this parallel channel on the weekly. Traders, all it's doing is testing the support on the bottom of this parallel channel right now. It's sitting right there. It hasn't fallen apart. It looks fantastic, in fact, on a weekly chart. So I am here to say once again, do not fall in love with the downside. This, if it holds, there'll be no more downside past Wednesday. So we're short-term traders. We're looking for downside on Wednesday on the daily charts. This weekly chart, however, tells us the bottom is in, or should be coming in on Wednesday. Now, we'll take a look at this chart at the end of the close on Wednesday. If we have bested these lines right here, and we're sitting down here, well, that's another story, right? It's what you gotta love about technical analysis. It's a never-ending story that is live and never stops moving. It's always in motion. So here we are, at least for Tuesday night into Wednesday. Then we look at the E-mini Russell. Traders, do you remember this chart? Any of my Omniacs that come to my live classes will absolutely remember this chart. This is the weekly Russell bar chart. When we got out above this blue line right here, when we got above that, I had said that if we pulled back, and I drew these little red lines, if we pulled back, we pull back to here and blast out. That's what those red lines were for. Well, guess what? We are very close to hitting that spot right now. If on Wednesday we hit that spot and hold, then the prediction will hold true. So the weekly charts are telling us no matter what happens, do not fall in love with the downside. Hey, I fit it all. How about that? Do not fall in love with the downside. That's what these charts are telling us. Again, if we get below here, another story will then ensue. For now, daily says yes, you can go short for a while on Wednesday. Weekly says do not fall in love with the downside. Don't expect anything major, just a quickie to the downside. Then there is the grain markets, traders, the corn market. Omni told us 3 weeks ago up here that the top was very likely in corn, and we've been taking advantage of sell days ever since. Now the corn is all the way down here. Omni has been dead on when it called this the top. We think it is the top, and we are looking to sell corn on Wednesday. Then there's another grain because we think more than one grain's going down. Look at these soybeans, traders. Soybeans looking very heavy. Look at this parallel channel. Last night, or I should say tonight, and yesterday, all we're doing is bouncing off the top of this red line and looking to head towards the bottom of it. That's where I think soybeans are going. Soybeans looking very heavy. Looks like this parallel channel will fill in and we will drop below 1550. You could get as low as 1500 in the soy if they keep pushing. And then traders, I looked at the CRB index to see if the grains do really look bearish. And when you look at the CRB index, if you recall this chart from the last video, I pointed out the small head and shoulders that has built and the fact that we dropped below this huge support line. Well, here we are now all the way down here, traders. The next bar should be this and then this. We are starting to move lower in the CRB, which is confirming our thoughts and our analysis pointing towards grains moving lower. Pull your own charts, take a look at the CRB, look at your grains, and then absolutely go look at the Dow Jones, the tranny, the ES, the NASDAQ, and see what you want to do for Wednesday. We are bearish. So traders, there is my technical argument for why we have the red Omni on the board. And you know what? It's a red Omni in the indices and the grains. It's all over the place. So you've seen the daily charts. They are looking bearish as can be, but you've seen the weekly charts. They are unequivocally telling you, do not fall in love with the downside. I'm leaving that on my board, traders. Make sure you remember it. Listen, it's okay to give it a little peck. A little peck on the cheek, you know. You give it a kiss, you send it home in the morning, but don't fall in love with it because we're just looking to take quick advantage of this down move. We are expecting higher before the year is up. We are looking for our 1540 to 1570 Omni call in the S&P, and we are not falling in love with the downside. However, on Wednesday, we'll certainly start off with the downside and see where it ends up. You've seen the grains, you've seen the CRB, you have my reasoning. Please go do your own analysis now and check that out for yourselves. Again, traders, remember we have an Omni camp coming October 26th through 29th. There are 2 tickets, one really, because one of them, I think the guy kind of took this afternoon. So I kind of told him I'd hold it off to the side. We really have 1 ticket left, 1 seat left at Omni camp. If you'd like that seat, fill out your OmniCamp applications and allow me to qualify you, and I'll see who is most suited to take that seat. All right, traders, I'll see you at the site. I'm going back downstairs to my trading room. Always remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stop sorting. Emotions are out. Yeah. Video number 922, and do not fall in love with the downside. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.